This is an exciting video. I hope y'all prepared because I am going to be breaking down, starting with my 30-minute PO3 model. I'm going to be breaking down how I go into the day and how I set up for my day, whether it's having a lot of confluences for a trade or not, what I'm looking for in the 30-minute, or if I'm not taking anything in the 30-minute, then what am I looking for in the 4 hour and the 10:30, 90 minute. So all these things I'm going to talk about, but I'm going to start with the 30-minute PO3 and how I go into my morning, basically my morning routine, and prepare myself and get ready on the charts. Because I want to do one at a time. There's a lot of information, and it would make sense to start the 30-minute first because the 30-minute is the opening 30 minutes, and that plays into the range of the 10 a.m. and the 10:30. So let's get started. Before we talk about the concepts and how the trading model plays out, I want you to understand what quarterly theory is, what the PO3 is, what market maker models are, and what AMDX is. And first, you need to understand that time and price are the most important things in the market. First of all is time, then is price. So we have starting us off XAMD, AMDX cycles. The cycles are perfect. It's like you're using AMD because a lot of people use AMD, but they don't know XAMDX. They don't know what the X is and how the cycles play. But usually seeing an AMD pattern is accumulation, manipulation, distribution. That's basically how we're using the AMDX cycles, but we're using those cycles as an opening so we can determine if we're in an XAMD, which is a more delayed distribution, or if we're in an AMDX, which is a distribution in the middle of price movement with possibility of that X continuing out our higher time frame move. So knowing our cycles and how they're aligning is important to determine the right time, and also at the right time when cycles are aligned, when you have three, four alignments, even five, that's when major moves happen. That's when prices low resistance liquidity and it makes the biggest moves. So it's the easiest to trade. Technically, most of day trades, strictly day trades, if we're talking about probably the 4 hour PO3, and if you're just wanting to trade the 30-minute, as we're talking about right now, you only need the 90-minute and the micro if you want to trade the 30-minute, first 30 minutes of market open. If price makes that Judas off open, then that 30 minutes and possibly like 7 to 10 minutes of the 4 hour PO3. That is all a time based trade, and that is such a high probability trade. It's ridiculous. And it's for that time too. You can get stopped out, and it's depending on your entry, you are likely to get stopped out or get a stop break even if you're in profit. So that's very important, and we need to understand this time based trading and time cycles are giving us the framework so that we can figure out where is manipulation, where is our expansion, where are we accumulating, and then where are targets depending on those sessions and opens, those lows and highs. So after that, we're looking at price. Price is basically ICT concepts. That's how we read the market, how we identify what ranges we're trading in, using premium and discount, and just figuring out where our reversal point is. So that's price, that's using market structure. And then we have QT, which is true opens, basically the opening of PO3, important openings that aren't regular trading hours, new daily opening gap, new weekly opening gap. So that is liquidity. And these opens, why I say it's liquidity is because every PO3, every cycle of time has an objective to take. And it has to take out some sort of liquidity, whether it's internal, external, to move in another direction. And QT is an example of how, like, a 30-minute uses True New York to get either a reversal from or to take a reversal to mitigate it. Same thing with True Day Open. That happens a lot of the time off of open and will either reverse or expand off the 10 a.m. or 4 hour PO3. So every entry is narrowed down by these confluences, and we're going to start at the most important one with time because our Kraken correlation SMT, microcycles, and what I just talked about. So let's stop. So now that you understand these three are time, price, and liquidity, what we're actually looking at, and the concepts that we can use to measure these in a real way with actual data and figure out how to take the most high probability trades. So first off, we have our Kraken correlation and SSMTs. Like I said, for the 30-minute PO3, what I'm looking for is a 90-minute and a microcycle. And what I do use for a temporary SMT is regular trading hours, new daily opening gaps. If we have an SMT in that opening, and I also use the quadrants of that opening gap to find, how significant our SMT is if we retrace to half the gap or 25% of the gap, and also take note of how big the gap is, if it's 150 points, 200 points, 300-point gap, and then how likely that is that we're going to fill part of that. It's not as important, but because we do the gap alignment and we do all these things before we have Kraken correlations, but mainly two Kraken correlations is good enough for entry. If you're looking at more than that, then start to think about holding for longer, and really price is going to show you how to do that. These are the confluences that we're going to use. 7 to 9 usually is a good trade and one that I would want to be in, and then getting into 12 to 15 confluences is when I start to think about holding for like 4-hour PO3 up until like about 12, like 11:30, 12 is when I'm exit most of my trades, unless it's like the whole day is going in one direction, but that rarely ever happens. So like 11 to 12, that is around the time the time cycle alignment that I'm looking for to be the high or reversal from there. So what I'm looking at is about 8 confluences, let's say. So first, let's get into them. I want to start off with gap alignment. So first, we have gap alignment and premium and discount dealing ranges. This is the most important for just overall reading price, determining what dealing range you're trading in. So first, look at an example for this. If we understand what dealing range we're trading in, then I can look at, where's CE of that, where are we trading out of. Things like that are very important. So I'm going to look at this 10 a.m. example because this is a perfect example of using gaps. We have our 1 hour, our 15-minute, our regular trading hours, gap quadrants right here to narrow our range. So a better example would be using like a 4-hour gap, something like this, for our opening 30-minute PO3. And when you see how we have that initial immediate reaction off of that, we have initial low, we have this black line CE of the range, high time frame range, and then we have our first presented that just doesn't even get tapped off of that true microcycle open at 922. We use that as a CISD, and it just runs up higher, higher, higher. Initial high gets taken, and we move into this bearish 1 hour. And this is a 10 a.m. reversal from there. What I'm focusing on is the 30-minute PO3 and how we're using gap alignment and true day open, true New York open to identify our trading range, because true New York, true day open will move something like this. So gap alignment is very important. That's really what we're using to identify our ranges. And then from those ranges, we can look at true day open and true New York and session liquidity, because our 30-minute PO3 objective, it either is to hit true day open, to hit true New York, or it's moving from true New York being mitigated to hit true day open. And from there, that is all we're looking for on price. We have a gap alignment, find your dealing range, mark out session liquidity, mark out your cycles, highs and lows. Usually, I just mark out one or the other until I start to see the other breakdown. So like 90-minute accumulation lows, 90 minutes manipulation lows, stuff like that is what I would be marking out for those Kraken correlations, just to see them easier. So that's what I'm doing to mark out my cycle Kraken correlations and my true microcycle open Kraken correlation, because that's the most important one we're looking at right here, right? Because that's our CISD. This is basically what we're looking for on repeat. 2 Kraken correlations, the microcycle tells you where to put your stop loss. First presented, if it gets tapped, that's fine. If not, we're using true microcycle open and some sort of OTE retrace, which is right here. Also, any kind of order block, propulsion block, and fair value gap tap, like a 2-minute is what usually gets traded on right now. I'm kind of seeing more 2-minute taps than 1 minute, just because it's half the data in one candle. So I don't know, something about it. It's just better for value gap taps is something that I'm noticing. So true day open, true New York mitigation. I know I wrote that or price may move from liquidity to true day open, true New York. I repeated myself, but that's so important because if it's moving from one of these to the other, we might not hit the all-time high target. We might not hit our external buy side. That might be something for our 10 a.m. to do. Like an example would be something like this is a good example of how our 30-minute did not hit our objective, but then our 10 a.m. did. This is a great example. So right here we had a microcycle, IFEG. That was another valid entry if you weren't in at the bottom. Then we put our standard deviation up for 10 a.m., which ended up being our continuation because we had another 10 a.m. sweep right here, another microcycle, and we didn't hit our objective. New daily opening gap. We came into it, we didn't fill it, but we had all-time highs higher. So our draw was clear, and I entered off of this. This is our 10 a.m. Regular trading hours does not show it all the way, all the cycles. So that is a little bit annoying. I do have to move between regular and electronic trading hours. But an example like that is what I'm talking about here. It is. This is what I'm talking about. So right there, we hit our initial high, but we didn't have the momentum to move higher on our 30-minute PO3. So this is why I like to use initial high and low sometimes, because they're useful. This is our highest high and our lowest low after 7 o'clock. After 7 o'clock. So, or sorry, after 7:30. But this is what I like to use. This gap right here, this 1 hour BPR, I didn't need to have it on, but that helped me just see kind of where my lowest lows were going to be. And that's where True New York is. True New York right here got mitigated, so we had no reason to come even lower. You can see that because right here, this True New York body low got swept and it created a balanced price range that we traded into right there. So this is an example of 10 a.m. hitting the objective of the 30-minute because the 30-minute hit something already and didn't need to move higher. But you can see that true microcycle open gave you verification to take that trade to the nearest internal buy side. So you really could have taken that 1 to 2 pretty easily and not even needed to take that trade. But this was a 1 to 4. And so that's why high time frame aligning in with that for the 4 hour is very nice if you want to take those high RR trades because they are high probability if you wait for them. And that's all dependent on just your management of yourself as a trader and your risk management as a trader and waiting and being patient for that to present itself. We're going to come down to the time-based aspects and then the confluences right here, which I actually already talked about. So these confluences, the true microcycle open, CISD, which work in tandem together, the IFEG breaker is what I love to use for a 10 a.m. reversal, like something like this 5-minute IFEG for a 10 a.m. reversal. Usually you don't get a 5, so I use a 1 minute to 3 minute. Something like this is where a 3 minute presented itself right after that 30-minute. Right there, you see a 2-minute BPR, 3-minute BPR as well up here in the OTE with an SMT in the range. So something like that is what I'm looking for a 10 a.m., but also in that 9 a.m. microcycle, so or 9:30 microcycle. So really, we're looking at the same confluences for each other. If you want to take your notes out right now, I'm going to tell you OTE 1 to 5 minute inversion for value gap or BPR. We're looking for the microcycle SSMT. We're looking for that CISD in the true microcycle open. If your objective is hit before another true microcycle is open in the next 90-minute cycle, you are not allowed to take a trade. It's just so less probable unless it's like a very deep 15-minute retrace like I talked about right here in this example, like a very deep 15-minute retrace to discount. Then you're going to get that third trade before the new microcycle is open. But usually that doesn't happen. So, or before the next 90-minute is trading and we're in the next microcycle. So, anyway, that is how we're going to go about the 30-minute PO3. That's your entry mechanism. It looks repetitive, almost easy. Like now that I explained it to you, it should look easy. So, we're basically doing so much analysis on our chart based on price that when it comes time to do that, when it comes time to align the 90 minute with the micro and possibly the daily and the weekly if you want to, get that 10 a.m. trade or wait for 10 a.m. like we talked about and all these other different versions. That's why we have the 90 minute. That's why we have our 4 hour. That's why we have the continuation and the reversal model because this is like the same thing. They're all connected. It's the AM price 9:30 to it's the AM price action 9:30 to 12, which is our two 90-minute cycles that give us probably the best volume of all time out of the market, and it's always consistent like that. But you're not always going to consistently get great setups. So, like I said, it's easy to see. It's easy to see. It's so easy to spot, but bad trading days, bad PA is certainly going to happen. Accumulation days like this at open, like this if you didn't wait for that 10 a.m. or 10:30. So stuff like that is what we have to manage ourselves on, and that's really what it comes down to when you are becoming a good trader that can read price action because you really are just waiting for these times. I just told you how to trade most of them, and we're only talking about the 30-minute model, and it just plays so much into the other models that it almost seems like a story, and it's like just giving you the instructions of how to trade it. So our last topic is just targeting price and time to exit. I said that just based on your DC cycles, your if you have a lot like 3, 4 cycles correlated in the distribution cycle or manipulation, like sure, trade that and hold it if it's giving you some high draw targets and if the price action is reading well, like a continuation model like this or like this, right? Yeah, same. That's the same one. Where's a 4 hour continuation? Like a good 4 hour continuation would be an example like this. It's a great 4 hour continuation, but this is just like simple XA manipulation D. Like it's that simple. It's this right here, but we're looking at a target, an entry. We're finding all these things and finding a reason to hold, like using the new daily opening gap CE right here. If if you didn't mark this out, maybe you wouldn't have held it right there because this was a very pivotal point. You can see that because from here we expanded so low resistance after this little time distortion before 10:30. That's all it is. You just got to figure out when the PA is good, how to hold through time distortion because when we're talking about cycles and we get the cycles aligned, then a lot of it is just waiting out the time distortion and bad PA for these models to happen in the short time frame. So the shortest time frame of them is the 30-minute. You can hold this longer, but it's just based on the price action and understanding time, sorry, price and time. This is time and this is our price aspect, but these are our confluences. So these are the most important confluences. I use these consistently. Really, this was all I ever had to use on the lower time frame. That would be it, including the OTE. Um, I will put OTE in because that is also important, but it's more important for the 10 a.m. range because either you're in the OTE in the 10 a.m. range or the 10 a.m. range creates an OTE to trade in, and we'll talk about it in another video. There's no need to rush. So that's the 30-minute. I hope you can figure this out pretty soon because it's such a nice model. It's so good. It's so quick to distribute. If you want to exit based on time, then you can get out easily 1 to 2s. 1 to 3s are sometimes harder, but if you're low in the like lowest low of the 30-minute candle or the 30-minute wick, then you can definitely get 1 to 3. You can size up on these trades. They can continue for all day. Like this is just a really great model to figure out how to trade open and when price is just going to continue from the rest for the rest of the day from open because that's when you really start to make some really good money and you just get so confident in your trading that you want to hold them longer. But judging which ones to hold longer or not is really, really hard sometimes. And it gets emotional because you're dealing with money and you're dealing with open P&L. So that's just one of our 3 models that we're going to get into. The 90-minute and the 4 hour play off of each other. Let's just look at the 30-minute on our previous Friday because this is another just perfect all-time high trading up example. that we just are going to continue off of every 5 minute SMTF, and you can enter in off of the wick of any of these and hold it for the rest of the day because that's what happened. And I forget because I haven't traded all-time highs in a while. So let's just start. We have True New York right here. Our data low was a bit lower on NQ than ES. It was like right here. So data low got hit. True New York is mitigated. We have a microcycle on ES, but this didn't happen on MNQ and it did on NQ. True microcycle opens. We use it as a CISD, and then 9:30 opens. We have this candle to create a market structure shift at 9:30. First presented gets tapped, and then we're just shooting up to this initial high, and this is also our all-time high. Off of that, I'm waiting for 10 a.m. But if you want to get in, this is the 5 minute model, like I talked about, like much earlier. I would use the 5 minute PO3 openings to figure out where the wick is going to be, go on the 30 second, and then enter in off of like an IFEG on the 15 or 30. IFEG right here. I would want to really get in the wick, so if even if it's just chopping, I would still probably enter something like that. Off of that, we have 10 a.m. and 10:30. This is how I'd use the openings. Off of this would have been a great continuation long. 10 a.m. and 10:30 are correlating 10 a.m. CE, or sorry, 10:30 CE. So entry anywhere in here would be great. That's how I'd use 10 and 10:30 opening candles. I would also put a stop like right there. The RR would be great on that. If you just hold it for the rest of the distribution cycle, like I said, our time-based entry. So our DC on the 9 minute that you would close at easily like almost 100 points, which is much more than that target of 60. So that would be the 10 a.m. 10:30 continuation. But like this is our perfect 30 minute PO3. It ended right there. So anything after this would be our 10 a.m. PO3. That is a great 10 a.m. PO3. I mean, there wasn't much correlation for continuation. Another 5 minute SMTF there. So not a lot of retraces to get a good RR entry. But if you had a low stop on that and sized up, you could have had a great winning day. So that is another way to trade that 30 minute. You can do those 5 minute SMTF continuations. And then, like I said, manipulation right here. Once we had that third manipulation in the daily cycle, I can now assume that this is going to be a bigger move because of that 3 cycle alignment. And then we are actually in the monthly manipulation. So we are moving higher and higher, all-time highs every day. So this is how I align it, a live example, not live, but on the live charts. On the 5 minute, like I said, it's easier to see these DCs because if we go to the 15, we're just going to take away the cycles and it's going to get all scrunched up. But on the 5 minute, it's easy to see true day open, DC, our distribution cycle lows, and to see when our SMT gets created. Then switch to the 2 minute and the 1 minute for an entry. 2 minute for value gap tap, entry right here as well. Stop in the first presented could be utilized for that 30 minute entry. 3 minute, I don't think there was anything, or there was little 3 minute tap. So great confluences. So that is our 30 minute model. It's so important that you understand the 30 minute model because it plays into how our 4 hour is going to play out and how our 90 minute is going to play out on these continuations. So this is very important. 30 minute PO3 is just the beginning of it, and understanding it and this entry pattern that we talked about on that true microcycle open, using the quadrants of the new daily opening gap, this perfect, if I can pull up the perfect entry pattern, this perfect entry pattern. If I can just solidify this entry pattern into your head for the 30 minute PO3, then it will help out so much and you'll be able to trade the 10 a.m. out of it. You'll be able to trade the 10 a.m. opposing to it. It'll be great. So understanding the 30 minute PO3 is essential, and this is just my tips and tricks on how to read it because it's really much easier than you think. I'll see you in the next video.